On a summer morning in 1930, a Palestinian émigré unlocked the doors of a small office in Jerusalem and attempted something audacious, a modern private Arab bank that would move capital across borders with the same ease stories moved across cafes. It was called Arab Bank, deliberately, not the Showman Bank, not a village name, not even Palestine Bank, but a banking institution for a wider Arab world. Within a generation, it would finance traders, rebuild lives after wars, and knit together regional commerce from Haifa to Amman, Cairo to Beirut, Geneva to London. Abdul Hamid Shoman was born near Jerusalem in Beit Hanina at the turn of the 20th century, Ottoman Palestine, a world where trade routes and empire borders shaped opportunity. With little formal schooling but a quick financial instinct, he sailed to the United States in 1911. In New York and the industrial Northeast, he hustled as a trader and shopkeeper, learned American bookkeeping and credit habits, and crucially saw how immigrant remittances kept families afloat across oceans. He wrote, organized, and supported Arab cultural life in exile, absorbing the most valuable lesson a banker can learn: money is trust in motion. Shoman brought that lesson home. In May 1930, Arab Bank was registered in Jerusalem. It opened for business that July with modest capital and an immodest mission: provide letters of credit, trade finance, savings and remittances to Arab merchants, farmers and professionals who had been underserved by colonial and foreign houses. The name signaled a supra-local ambition, a bank of the Arab world, not a single city. How the early bank worked in plain words: 1. Letters of credit, LCs. A merchant in Nablus buying cotton from Alexandria didn't have to ship cash. The bank guaranteed payment if documents matched the deal, bill of lading, invoice. That guarantee unlocked trade. 2. Correspondent banking. Arab Bank held accounts with banks in port cities. Funds could be credited in Beirut, debited in Jerusalem, like moving money through a network of trusted cousins. 3. Remittances. Workers abroad sent earnings home quickly and reliably. The bank's reputation was the railway for those wages. The 1930s were volcanic. Shoman's profile rose amid political tumult. He was briefly detained by the British during the 1936 general strike, a sign of how business and nationhood were entangled. But 1948 proved decisive. As the mandate ended and war erupted, branch operations were disrupted and many customers fled. In a move that cemented its brand for decades, Arab Bank honored withdrawal requests and redeemed deposits to customers who had been forced to leave, turning crisis into a reputational asset money couldn't buy. Headquarters shifted to Amman in 1948, where the bank incorporated as a public shareholding company and rebuilt its network across Arab hubs. By the 1950s, Arab Bank had grown into dozens of branches, financing importers, contractors and small industries that underpinned everyday growth. Then came the 1960s wave of nationalizations as states asserted control over key sectors. The bank lost multiple branches in countries like Egypt, Syria, Iraq, Aden, Sudan and Libya. Painful write-offs that would have sunk a less disciplined institution. Arab Bank's response was classic showman pragmatism: diversify jurisdictional risk and keep liquidity high. The group established a sister institution in Switzerland in the early 1960s, anchoring private banking relationships in a stable legal environment and preserving continuity for clients scattered by politics. When Abdul Hamid Shoman passed away in 1974, his son Abdul Majid Shoman took the helm, pushing the bank deeper into project and syndicated finance, the big-ticket loans that build ports, power and pipelines, while maintaining the retail and trade finance routes. The playbook was conservative but ambitious: strong capital, formidable liquidity and a risk culture that prized survival over fashion. Decades later, during the 2008-09 global crisis, outside observers would note how that liquidity-first DNA helped Jordan's flagship bank ride out global turbulence. How the machine worked liquidity as a moat. Arab Bank kept a larger-than-average cushion of cash and near-cash assets, When markets froze, it could still meet withdrawals, honor LCs, and lend selectively, protecting its franchise. Syndicated loans explained, for a new refinery or fiber optic backbone, one bank rarely lends the whole ticket. A lead arranger, often Arab bank in the region, structures the deal, sets covenants, and invites other banks to take slices. This spreads risk and moves big projects from blueprint to reality. The diaspora effect. Remittances from the Gulf, Europe, and the Americas flowed through the bank's network into Palestinian towns, Jordanian cities, and beyond. Steady, counter-cyclical lifeblood that supported housing, education, and small business formation. From the 1990s onward, Arab Bank added investment banking capabilities and rebuilt an international footprint. Europe Arab Bank in London launched in 2007 to serve trade corridors into Europe, stakes in regional banks, for example Turkey, and an expanded presence across 5 continents created multiple on-ramps for clients exporting, importing, and investing across borders. The bank also reopened and grew operations where politics allowed, always with the same formula: prudent risk, deep local teams, and long memory. Litigation and the modern compliance era. The 2000s brought a new battlefield, US anti-terrorism civil litigation, which sought to hold financial institutions liable for transactions that allegedly facilitated militant activity. Arab Bank contested these claims. In 2018, the US Court of Appeals for the Second Circuit vacated a liability verdict in a leading case, a key legal outcome after years of litigation. The compliance lesson was unmistakable. The modern bank needed fortress-level screening, reporting, and documentation to operate across jurisdictions where politics and payments are tightly intertwined. Showman believed finance without culture is a body without a soul. In 1978, Arab Bank seeded the Abdul Hamid Showman Foundation in Amman to fund research, libraries, children's learning, arts, and public debate, allocating profits to nurture knowledge as deliberately as it nurtured credit. Parallel to this, the Showman family supported Darat al-Funun, the Khalid Showman Foundation in Amman, today a leading home for contemporary Arab art. The message to future generations was clear: capital is more than balance sheets, it's what a society builds with them. Today, headquartered in Amman, the Arab Bank operates 600-plus branches across 30 countries with $68.3 billion in assets and $829.6 million in net income in 2023. Figures that place it among the Middle East's largest private sector banking groups. Listed on the Amman Stock Exchange, it remains a core pillar of Jordan's economy and a conduit of regional trade and investment flows. What, ultimately, did Abdul Hamid Showman build? Not just a bank, but infrastructure for trust in an age of upheaval. He took the immigrants' grit he learned in America and fused it with an Arab vision large enough to span cities, languages, and frontiers. He showed that a financial institution could be both commercially hard-headed and socially rooted, redeeming deposits in the worst of times, financing trade in the best of times, and investing in culture across all times. In a region where history can turn overnight, Arab Bank's story is a masterclass in durable finance. Keep liquidity deep, diversify politically, serve the real economy, and remember that reputation compounds faster than interest. For nearly a century, that formula has paid, literally and figuratively, for customers, communities, and a region still weaving its next chapter of commerce and culture.